Thanks, Paul, for that. And I know I'm standing in the way of free drinks, so the longer I talk, the less I have to pay. So bear with me. Look, just want to take you through, I haven't presented really this business other than a couple of spot appearances at the Rising Stars Conference on the Gold Coast. For the last 2.5 years, we're just, myself and the team have just been head down, bum up and building a business from scratch. So I just want to take you through, and one of the key things I want you to take away is, yes, everyone's worried about cost of living, inflation, interest rates and all that. China's economy is in the doldrums at the moment, but when the world does normalise and it's risk on again and the world wants to grow, those people that have got assets in copper and zinc and lithium are going to do very, very well. So I want to take you through how leveraged we are to that rebound, because it's an amazing portfolio that we've put together. We'll start with a vision. And again, there's a little bit of the thematic of previous presenters, but it's people in this game. There's no kids coming into the industry. There's no one people doing the trades. So unless you've got workforces and a vision that people sign up to, you won't get people. Try and get someone in the mid-30s and under to join a gold company now. They just don't want to do it. But we will use, and this is our vision, we'll utilise the power of people to produce clean metals and help decarbonise the world. That is right through our business, and I'll take you through some of the elements of that. But it's super important having a vision, because I dig up stuff for a living, but I only want to dig up stuff that makes the world a better place. We have got a hybrid business model, as Paul said. It is very unique. The only other company that's got a business model like ours is Mineral Resources. Some people are calling us the mini MinRes. I'll take that. Or mini IGO with MinRes capability. But it's a very unique business model. It's a hybrid. So we have mine ownership and we have mining services, and it's all underground. These are the 5 pillars of our 5-year strategy that we put out pretty much this time last year. And we've ticked off pretty much 2 of these already. First one was we want to build world-class underground capability, and that's both operators, maintenance and technical. That's done. That's all in place. We've recruited the best of the best in the world in underground. There's no two ways about that. We'll be one of the most socially responsible ESG-friendly companies on the ASX. That is a given. That is part of our mantra. I'll take you through some of our sustainability and how we're looking at it. And because we have a new company, we don't have to retrofit like everyone else is doing. Ask Rio and BHP how they're retrofitting the Pilbara with renewable energy. It's not as easy as you think. We'll produce some of the world's cleanest energy transition metals. I'll take you through again a couple of our assets and what that looks like. We will have one of the poster childs of the next generation of mines here in New South Wales, WOODLAWN. We are high grade, we're low carbon intensity, we're literally the poster child for that next generation. Dial down a little bit for the ASX, but our annual sort of outlook on what we want to produce in metal-wise, 50 to 70,000 tonne of copper equivalent, and that's out without our lithium proposal. It's subject to shareholder approval. And we want to have long mine lives, and we've already done that. We put out a mine plan last week of, I think, 7 years on WOODLAWN. In the previous month, we put out a mine plan of 8 years on Sulphur Springs. So we've already ticked off the mine life thing, which doesn't happen that easy on underground deposits. And our mining services, we don't want to be big here, guys. 2 to 3 mining projects for other people. And I'll take you through why we're doing that business. But that generates really good free cash flow. People. I can't emphasise this enough. The mines of the future are underground. Doesn't matter what commodity you talk about, it's getting really hard to permit open pits anywhere around the world. Extremely hard. I'll give you an example. There was a very large lithium deposit that's subject to a takeover at the moment called Liontown. That should be a large open pit, 2-to-1 strip ratio, should have been mining it 18 months ago. But the traditional owners wouldn't let them do an open pit, so hence it's going to be one of the state's largest underground mines. So this is happening in our own backyard. And then throw on, if you're not in the critical mineral space, it is really hard to get shit permitted. Look, we've got an amazing network. We've built our capability. We don't talk attention, retention, or turnover. Never mention our organisation, which is extraordinary. We've got over 300 people now in the business, and that's radically growing every quarter. Sustainability. This is pretty interesting. The mining industry is pretty much on the left-hand side there. They're impacting. They're trying to avoid. They're trying to minimise now. No one's doing this. No one's restoring. How do you restore waste dumps in the Pilbara? Nothing grows in the Pilbara. There's no topsoil. You can't restore. One of the biggest issues confronting the industry in years to come. We want to do a positive contribution as this business. And as I emphasise, we've got a blank canvas. So in our M&A, in our operating, our capital decisions, we're embedding this into our business now. It's super, super important. We want to be a positive contribution. And we can be because we're in the right commodities. We're high grade. We're underground. So our carbon footprint is actually very tiny. And plus our mines are going to be hooked up to renewables as well. So we're in an amazing position. And we're actually restoring as well at Woodlawn as we speak. And I'll take you through that in a minute. This is a landmark agreement. We're very proactive here, guys. You've got to take all your stakeholders on a journey in mining these days. And it's not just politicians or regulators. It's your local community. Obviously, we work in remote parts of Australia, so traditional owners are super important. We just signed a landmark agreement a couple of weeks ago. We didn't have to do this, but we operate at Bellevue Gold in our mining services, and we're on TJIWARL's ground. So this is the guy that knocked back the open pit of Liontown. We operate in their country. They've got Bellevue Gold, they've got Liontown, they've got IGO Cosmos Nickel, they've got BHP Leinster Nickel, BHP Mount Keith Nickel on their country. Unless you get these people on side, you don't have a mine, you don't have a deposit. And I've been warning people about engagement on this. We didn't have to do this, but we signed a landmark agreement as a mining service provider. So we've done a 50-50 business relationship. We've created an entity. We've got our first contract. We're doing the ROM loading at the new mill that Bellevue are building at the moment. And we'll hand that over in 3 years for $1. I just want to build up capacity, build up business skills with traditional owners. It's not about employment and trainees anymore, traineeship. It's only 450 TJIWARL members. BHP would employ 900 if they could, but there's no businesses. They haven't got something that actually is intergenerational. So we're very proud of what we've done there. And look, it's just resonated. This is going to rip through the Eastern Goldfields. They're probably about 10 years behind Pilbara TOs. They've only just got to termination since probably 2016, 2017. But already our Sulphur Springs project is up in the Pilbara. It's on Narmal country. Pretty much half of Rio Tinto's mines are on Narmal. Pilbara Minerals, Ironbridge, FMG. She's married to a tailor who's the chairman of Narmal. And as soon as we sign this agreement, all of a sudden we're the best corporate citizens in the Pilbara. So there's this element of just doing the right thing. You get mutual benefit down the track. And super important, guys, you know, I've been warning people about White Rock and Hills. It's very sacred for traditional owners. They've been using it as marker horizon for travel for 60,000 years. So if you've got White Rock and Hill, ask whether you've got an agreement, because that's why Liontown's a big underground soon, because it's White Rock and Hill. They wouldn't let them do it. And the other thing is water. If you're in the lithium game, you need quality water. And I mean like Sydney tap water or Perth tap water. That's what you need to process flotation in lithium. The most sacred thing to traditional owners for 60,000 years is water. They now have to get approved in WA to get a water licence, has to get approved by TOs. Water department will not look at your application. So unless you've got them on side, you don't have a deposit. Look, on to Woodlawn. We acquired this May last year. Look, hopefully there's no Heron shareholders in here, but you know, it's $340 million. Sometimes when people, you know, spend $340 million, you can't see it, you can't touch it, you can't feel it. You can definitely see it here. It's amazing infrastructure. And look, everything's brand new. So what have we done since owning it? Got an amazing operational team there. We've got a great resource, you know, nearly 7 million tonnes at sort of 4% copper equivalent. Reserve just went up 10% last month. Everything's new. New mill, paste fill plant, offices, change rooms. Everywhere you open a cupboard, there's a sticker on something that's brand new. It literally is. We've got a new decline that's now 410 vertical metres below surface. They built a brand new underground as well. Literally got into the first ore drive 25 metres and went into administration. So it gave us an amazing head start. This is a net zero water discharge site, guys. It's very unique. We actually take and will be taking the processed water. We share a facility here with Veolia, part of their licence. They have to treat water. So we get potable water. They're not allowed to discharge it. Otherwise it probably comes down the rivers and gets in the harbour here. But we take that water and put it in our processing. So this is very, very water friendly. It's an amazing asset. And we also get, you've probably all got FOGO in your councils here, but basically compost. We get free compost off them, and we put it on our historic tailings dams, and we're rehabbing them with compost and having amazing results. It's a cutting edge R&D project that'll probably go national. So we're actually restoring it. We're one of the only companies restoring stuff in mining. It's amazing. This is the postage hole. Look, we put out a NMPV last week on our project, and I should emphasise we've been doing, we've spent $44 million since May, doing a lot of underground capital development. We're opening the whole mine plan up, and we've done 40,000 metres of underground diamond drilling. None of that work is in the mine plan I put out last week. So this is in the inherited mine plan we bought the place on, and we basically rescheduled, re-optimised, redesigned, recosted, and come out with a pretty cool mine plan of about $480 million. Probably got one of the best internal rate of returns in industry, 367%. And we've got pre-production capital of only $32 million. So this is amazing. And what I do like about it is, even though copper and zinc price are pretty bloody crap at the moment, it still makes around 90 to 100 mil free cash flow a year on those prices. So this is an amazing high grade, low cost mine that's severely leveraged, and it's an amazing asset. So the team's done a brilliant job on that. What we're doing there at the moment, I keep doing the underground capital development. We're busy opening up the ore body. By the end of this calendar year, my first 2 years of production are fully developed. So if you're an open pit miner in this room, that's like putting 2 years of ore on your ROM pad, ready for your processing. It's just an extraordinary position. I've never had that head start in my career. We'll obviously fund this by debt, so there's no more equity, which is very accretive for shareholders. Like I said, we've done a lot of drilling. This is turning more into a copper mine than a zinc mine. So the mine plan we put out last week was about 50-50 on copper and zinc. The mine plan early next year will be more copper rich than zinc, and we can see that by some of these stunning drill results. So we've got a resource update going out next month. Pretty excited about that. And then we'll have a further resource update, March quarter next year. That will lead into a new reserve. We know we're going to grow resources. We know we're going to grow reserves. That's a no-brainer. You can see it from the drilling. The drilling we're just doing now to the end of the year is pretty much infill drilling, just to basically prove up the confidence level to put it in reserves. And that will obviously go into a final mine plan that we make final investment decision on in March quarter. Sulphur Springs, we've been pretty busy on this as well. I've spent $15 million on this over the last 2 years. This is what I recapped the business on two and a bit years ago. This is an amazing zinc and copper project up in the Pilbara. Right next to Ironbridge, not far from Pilbara Minerals in Wodgina. Really good location. So high grade resource. We've got all our approvals here, guys. This was one of the legacy issues with this project, was getting all the approvals. This is actually shovel ready now. We put out an MPV basically on the 30th of June, a couple of months ago, $523 million, and it's got a capex of 300 mil. So this will be our third cab off the rank. This will be after Essential and WOODLAWN. But when it's built, it does spit out a hell of a lot of free cash flow, nearly $150 million a year. So I think you're starting to get the view of how leveraged our portfolio is, and with not a lot of capital. And I mean not a lot of capital. It's a new mine plan, it's underground only. We didn't look at the open pit, we didn't look at the satellite Kangaroo Coves project. So this is just getting into the fresh rock. Metallurgy's a lot better. It's a pretty simple concentrate. We've got really good optics up front. And the other thing about both here and WOODLAWN is none of our projects have off-take agreements. There's a small bit of zinc at Sulphur Springs, but WOODLAWN's got no off-take agreements. So what does that mean? That means our ability to fund. We're like the prettiest person in the room. Everyone wants to talk to us. And the most popular because we've got no off-take. It's a really, really powerful position. And it's also the same in the lithium game. You should never give your off-take away. Onto essential metals. So just want to give you a little bit of a thought on what we're doing here. There's only so much we can say because we are running a scheme, so I don't want anyone to throw knives at me. Look, this is an amazing sort of location. It's in the lithium corridor down the south of, it's about 150 k's south of Kalgoorlie, where I've probably lived for about 8 years and been working on and off for about 20. It's about 270 k's north of Esperance, where I grew up and was born and bred. Still get down there, and I've got a bit of property down there. It's a great location. You don't get any easier to build a mine. It's straight off the eastern Goldfields to Norseman Highway. 10 k's off. It's flat. This is just flat mallee country. It's not white rock in hill. It does outcrop. It is white rock, but at least it's not in a hill, so we don't have traditional owner issues. They've already done drilling, already got clearances. They've already got a traditional owner mining agreement. Super, super important. And it's a modern day mining agreement. Every single mining company in Australia is renegotiating their mining agreements with TOs. They might not tell you, but they all are behind closed doors. These guys had an agreement from 2017, so it is the modern type agreement. Hence why they could get a mining lease in February this year. So pretty important piece, because otherwise you can get stuck for years and years and years negotiating that stuff, and that's why Liontown took longer, that's why Bellevue took a bit longer, is because of exactly that. So look, I've probably built, I think I've built 5 or 6 mines within 30-kilometre radius of this, so it's pretty important. I know every neighbour here. The nearest mine is Karora. It's TSX listed. I've got a common director on both boards of Develop and Karora. Everyone in the management team either work for me or I work with or played footy with in Campbell, which is just north of here. ESS put out a scoping study earlier this year off their current resources. Pretty typical small cap scoping study. You know, there's a big difference between a scoping study and a definitive feasibility study like we put out in Sulphur Springs, or pretty much what we put out in WOODLAWN last week. You know, open pit costs a little bit light on, recovery's a little bit too high. You know, perf tap water in test work. There's no perf tap water here. There's no perf tap water in the eastern Goldfields, full stop. But good mine life, capital 300 odd mil, probably about right, not far off. But still, you know, conservative pricing assumptions. But we're pretty attracted. We are looking at the project a little bit different. You know, their scoping study was a 3-stage pit, mining half of Western Australia, 13:1 strip ratio. Anyone that's done big, large pits, and I did mine a big one in Kalgoorlie a couple of years ago. When you do these big pre-strips and commodity prices go down, you either go bankrupt or you're pushing pause, so I get a bit nervous on big strips. But we're looked in a little bit different. We're sort of looking at a small starter pit, maybe 3:1, get 500,000 tonne of ore. They can either, you know, go offshore or go somewhere else, but then get into the high grade component and go underground. So that's the part that we're looking at, which we can get into underground way quicker than what you can from an open pit perspective. So there's a good little core to the ore body that can obviously improve MPV. So when we sat down with Essential, that was pretty important of what we bring to the table, is we can fast track the development on here. So we're pretty busy on the ground. We've got an agreed budget that we're spending as part of our implementation agreement that we signed. But you know, anything to do with lithium, guys, met test work, met test work, met test work, more met test work, more met test work. Can't emphasise enough. It's the most critical thing. Catch up with some of these young guys that just presented today, because they've just built a couple of plants themselves, and they'll re-emphasise that. But you know, for here, we're doing a lot of drilling, so we're drilling out the first 125 vertical metres of the ore body. I want 4 tonne of core, so I can do met test work. It takes about 6 months to get that stuff done. I've got TOs booked next month to rock up on site and do the clearances. So this is clearing the whole mine plan and all the other clearing and I guess flora and fauna and water studies that we're doing in tandem. So we have put out a bit of a timeline there. We want this sort of shovel ready by mid next year. So again, this was one of the appeals, is what we can bring to the table is we can fast track, you know, I won't say shit, but we can fast track stuff. We don't stuff around. I've got permitting people, I've got environmental people, I've got ESS people, you know, ESG people all lined up. You can't find those people in the industry at the moment. They've got track records. Look, I'll talk about my mining services. Look, 3 key things of why we're doing underground mining services. You know, probably main thing is, well, 3 key things. I call them the 3 C's. Culture. On a mine site, 90% of your workforce are blue collar workers. 10% of people like me, a mining engineer, geo or a surveyor or a metallurgist, might be a bean counter, maybe let 1 on site. That's about it. But 90%, they're the people that actually break the rock and pour the metal. They create the culture. I've built a number of businesses off blue collar workers, and they're the ones that create culture, and they're the ones that walk over hot coals for you and do the right thing on night shift. Second is capability. I I've been scaring a few fund managers in Sydney when I was here last week, but there is no one out there from an underground basis. There is so much work. I did not want to be at the mercy of the mining services industry in the underground game, because there is no one around to do it. And it's radically changing. And I've got 3 projects, or soon to be 3 projects, that are all undergrounds. So I need that capability to actually build my own mines. And third one, which is probably important for you people in the room, is it provides cash flow. And when you do these things right, I've built 4 underground businesses now. When you do these things right, you can actually make really good margins. It's very different to open pit mining services. Capital's only 12% of my cost base. 50% is labour, and if I can get productivity deltas of 300 or 400% between industry average on operators, I can actually make really good margins. So that means I'm not coming back to you guys to get money to build my business, and also means I don't have to keep writing checks, because I think I'm up to about 46 mil of my own money into the business, so I can't keep writing those checks. We're going really well at Bellevue. We're actually smashing it. I'll let them talk about their asset, but we're well ahead of industry. Our development rates underground there are 40% above industry average. That's really unique. That doesn't happen, but it should, because I've got the past 2 world development record teams, project managers, foremen, shift boss, jump operators, maintenance staff. They're both at Bellevue, so we should be doing pretty well. Look, we've got a pretty standard industry contract. We work on fixed and variable contracts, so basically 30% fixed every month, 70% variable. So what that does is I get my maintenance staff, I get all my equipment paid every month by my client, and a lot of my management, so it's really risk-free. And pretty much the variable, if you don't break rock, you're not getting paid, and if you're not getting paid, it's fine, because all my operators are on variable as well, so it protects you. And very importantly, in this environment, we have rise and fall clauses, which actually keep up with inflation and some, so it's a really good condition that we have in our contract. So it means we're doing it right. This is just a list of projects. Like I said, I've been scaring a few fund managers in Sydney and Melbourne. And I wasn't allowed to put the tonnages on here. The ASX had a bit of a problem with that. But these are monster jobs. That Fimiston underground is a 4 to 8 million tonne underground that's got to get built in the next 5-6 years in Kalgoorlie. Liontown, we already done that. It's a 3 or 4 million tonne per annum underground that starts in November this year. Havieron, that's a monster mine. That'll be a 3 million tonne per annum mine. And they haven't even got to the top of the ore body yet. This is, I don't know who's going to do with this. There's no one around. Right, that's why my phone is ringing off its hat with people saying, can you help us look at a project? And I'm like, no, I need 2 or 3 contracts. That's all I want. I've got one, doing some work with MinRes on Mount Marion, so we'll see where that ends up. I think they're taking everyone aside in October, so hopefully they show everyone the underground potential there, because they've announced they are going underground, and hopefully it's with us. Let alone what's happening here on the East Coast. Everything's expanding. Heaps of mines, and by the way, every international company loves Australian underground expertise, and they're taking them all offshore as we speak, so they're robbing everyone here. So if you can get people to work for you, you can do really well, in a very strong position. Look, we've got a great balance sheet, $61 million, or 60.5 at the end of August. Equipment finance, drawn down about 25 million bucks, but again, this is for my mining services only. I get paid every month for that machine. Undrawn facilities 36. We've got great support from the OEMs, Sandvix, the Caterpillars of the world, and Epirocs. You probably haven't heard of some of them, but they are the equipment we use. They're amazing clients or business partners of us, and they're really supporting our business, but they should, because I've bought over $1 billion of Sandvik gear in my career, so they should look after me at the best rates. No corporate debt, which is amazing. We did test the water with WOODLAWN earlier this year on term sheets for 50 mil. We got back great terms, and they're not from 3rd tier lenders, they're actually from HSBC, SocGen and Macquarie. Macquarie a little bit more aggressive than the other 2, but anyway. And the other thing is, we've got an unaudited tax losses of nearly $300 million. I inherited that. It was one of the appeals of recapping Venturex 2.5 years ago. That's a tax shield of $85 million. Now, just want to make a few comments. So yeah, look, on the Essential deal, they lodged a scheme booklet on Friday, and I just want to have a little sort of pick apart of some of that scheme booklet. So the experts have concluded that in the absence of a superior offer, the scheme is not fair, but reasonable, and in the best interest of shareholders of Essential. Now, this is based on an independent expert report, which among other things, inflates develops costs by 15%. I forgot when these experts last ran a mining operation. Their assumed average copper price is 9 to 10% lower than the spot price right now. And their assumed zinc price is also 9% lower. And these are really poor prices at the moment due to, we know the economic headwinds at the moment. But if you all believe that in the coming years that we don't have at least the current spot or significantly higher prices for copper and zinc, then you shouldn't be in this room. And maybe you should go out and buy some Telstra shares. The project valuation discount rates they used, I believe, is just ridiculous. Seriously, a 10% discount rate for Woodlawn, which has already got $340 million of capital sunk. We've put in another 44 mil. We've significantly de-risked this asset. It has an IRR of 367%, and basically I'm taking out debt of 50 mil to build it, and no equity, and a payback less than 12 months, and it cops this discount. I hate to see what they're going to give an African project, lithium project, and discount rates apply to that. Our mining services cops a discount of 9%. This is too high, given our contract structures. They have rise and fall in there, which picks up inflation. Capital expenditure is low, as I said, it's only 12% of my cost base, and that's accounted for in our rates. Also, the contract structures are de-risked through a fixed and variable contract. The report puts the chance of a contract extension at Bellevue at just 80%. I don't know anywhere in my time in underground mining where the incumbent contractor hasn't been renewed after their first term. And in this environment, there is no one out there to replace us from. And also, the probability is we get a second contract is 75%. Geez, they should tell that to the companies that we're currently discussing opportunities with, because they'll poop themselves. And to top it off, they add a 23% minority discount to it. So they get your valuation, and then they take 23% off for some unknown reason that I'm still yet to work out. And now here's some basic numbers which aren't too hard for an expert to work out. My tax losses are worth 43 cents a share. My cash is worth 31 cents a share. And here's some factors worth considering for essential shareholders. The price of essential lithium peers have gone down on average 16% since we agreed our bid in early July, whilst essential's only fallen 8%. I'd say that's thanks to Develop coming along. Also, since the TLEA bid at 50 cents per share was announced earlier this year, the lithium spodumene price, what we dig up and what we get paid for, has come down a whopping 58%. And today my bid is equal to 52 cents per share. I think I'm mad, considering that drop in price. What's going to happen to ESS share price if this deal fails? Essential's Pioneer Dome project is going to take time and skill. The required studies for mining approvals will take time, and a strong balance sheet will be needed to finance the development. It will greatly assist having long-term relationships with regional mining players and service providers to get this project built. Everyone's very, very busy in Western Australia at the moment. In fact, unless you've got relationships, they won't help you. And we have that in spades. It needs a different operational view of the mine plan to de-risk the build, optimise the mine plan and improve the economics. Now let's talk mine building, as this is the only way essential shareholders will get further value from their main asset. The deposit is too small for bigger companies to tackle. It needs a nimble, cost-focused and expert mine builder to extract value of the resource. This is a sweet spot for Develop, and it's core to our DNA. We have the team to get on with creating this value. I took them aside a couple of weeks ago, and boy, they are pumped about getting into it. Essential shareholders, we would love to welcome you to Develop. The combination will stop further significant dilution you were about to face before I come on. It will stop you potentially hanging on the corporate vine for years to come, waiting for something else to happen. And you get a team that has the best track record of creating value on the ASX for the past 13 years. By accepting our script, you still get significant exposure to the project, especially as we create significant value from all the pillars of our portfolio. I'm not working my butt off at the moment for a small return. And lastly, I'm putting my money where my mouth is. I've put in over 15.4 mil of cash into Develop in the past 18 months alone on this asset base. This is on top of a lot more cash I put in a bit over 2 years ago to recapitalise the company. So I think the case for the combination development essential is an absolute no-brainer, and I hope you share my view. And with that, thank you very much.